welcome to the final session of today's Small Business Power Breakfast and Conference. How's it been so far?
Dope.
Yeah. So far, pretty good. We've already supercharged your day, but we're going to give you dessert now and a little something extra to help you with your business. And this piece is about helping you make more money. So that's the important part. You know, you can sell stuff and bring money in, but you want to keep and be as profitable as possible. So we're going to talk about some things that you as a business owner need to know and have an understanding of, so that you can make sure you're running your business in a way that they can be as profitable as possible. So that's really what today we're doing. So we've got our panel this afternoon. We've got three financial professionals, and really that cover different areas of finance. A lot of times people think accounting is finance, which it isn't necessarily. And bookkeeping is not accounting or finance, but they all play a role together. And it's important to find the right people who understand the issue that you're having, and you may need more than one person. A lot of people just rely on their accountant, and accountants are great, but they don't always do everything. And so you're going to get a little bit of a feel for the landscape of finance as well. So without further ado, I'm going to give a super short intro of each guest, and I'll let them talk a little bit about their background. Fair enough? All right, so Jack's right here to the right, and works with Cornerstone Financial Partners, and in the financial services business. You want to talk a little bit about that?
Sure. So I'm one of the managing directors at Cornerstone Financial, and what we really focus on is kind of what you guys all do. You're all small business owners. So when we look at this, we say to ourselves, how do we be efficient as a business owner? How do we be tax efficient as a business owner? And what we do is we do both tax and wealth strategies. So there's different sections to it, different areas to it, which, we'll get into some of that a little bit. But when you really look at it, you not only have your generations is building this business, what do you do for the next generation? So we help do planning today, we're planning tomorrow.
Okay, excellent. Thanks, sir. Mary Baker Tax and Accounting. She's our fearless leader of the Black Business Alliance. So if you're not a member, something you may want to consider. And has won a lot of awards. So Mary Baker, CPA.
Hi. So what we do at Baker Tax and Accounting Services, we provide tax planning services and accounting services. So we help you prepare so that when you go to your financial advisor, if you go into a bank, or if you're applying for a grant or any type of financial services, we prepare you for that so that you are ready financially. Also, we help you strategize in preparing for your future goal of what you want to do financially. If you want to purchase a building, you want to purchase a home, or anything like that, that's the service that we provide for you.
Okay, excellent. And we've got Robert. He's a new addition. So, and I just met him last night. So but he seems pretty cool.
Okay, my name is Robert Mitchell. I'm the owner and managing partner of One Books LLC. We provide, similar to Mary, we provide bookkeeping and accounting services, and I also do CFO services privately. I have about 45 businesses that I keep the books and accounting records for, and we take that burden off of the business owners so they can do what they do best, and that's run their business.
Okay. Excellent. So, any other accountants or finance people in the room? Okay. All right. So basically, we could tell you anything, and you won't know the difference.
Listen, we're entrepreneurs. We have 17 hats. We're accountants, plumbers, we're everything.
All right. So, but really, what I want to start with, it's important to start with the basics. So, some of these things you may or may not know, but it's important to just refresh them, and then we'll go beyond that. But we'll go this way.
Okay.
So, Robert, if everybody could take a stab at, you work with different business owners.
Yeah.
What is it that you wish they knew when they came in to work with you? What is it that they should know, or
Well, I think they need to know that the accuracy of their books is important for them in order for them to understand how their businesses operate. Many of the clients that we start working with are operating their businesses by the balance in their checking account. They really never take the time to look at what are their sales, what is their margin on the sales, what's their gross profit. These are concepts that a lot of them don't necessarily understand because they know how to make something or they know how to provide a service, but they've never really gotten the financial literacy that they need to be able to run their business by the numbers. So I start with the very basics and explaining to them that everything they do results in a transaction. So when they go out, if let's say they're a plumber, they go out to do a job, that job turns into an invoice, that invoice turns into a receivable, that receivable then gets paid, it turns into cash, and that's what that business cycle is about. And I show them then on their profit and loss how that works. I also explain to them what a balance sheet is. Many people have no idea who are in business what a balance sheet is and why it's important. Well, the balance sheet has a lot of things on there that you should be watching, like your accounts receivable, who owes you money. If you don't handle that properly, you could be taking money and applying it to an account that may be to the wrong account, and then you're calling that account up and saying, you owe me, no, I paid you, and can't figure out what's what, and then they don't know who they owe because they're not entering the bill into it. So they get a bill from someone, a Verizon bill, and all of a sudden they haven't entered it. They look and their Verizon account just cut off because they haven't paid the bill. So, I try to get them to understand that bookkeeping and accounting is the cornerstone of running a business. And from there, I take their records in. I use QuickBooks Online primarily, but I do desktop also. And I take it all the way through from the start of the year to the end of the year. I talk with them during the year, as some of you may know. I call my accounts every month. Tell them where they are, give them a copy of their financial statement. Ask them if they have any questions, point out to them anything that I see looks a little awry. A lot of them funnel personal expenses through their business that I say, you know what, you can do some of this, but some of this shopping at Victoria's Secret probably isn't going to cut it.
Mental health.
Yeah.
Depends on what business you in.
That's true.
Touche, very good. Very good.
You said talking about finance is going to be stale.
I only said that, but no, that's definitely a great point. You mentioned that if you don't understand your financials, you don't understand how your business runs.
Right.
And why would anyone invest in you or lend to you if you don't understand how your business works? And that's a big reason why a lot of small business owners don't get financing. It's so hard to have access to it. So Mary, you work with a lot of people, and they come in with different challenges. What are some of the common ones, and what are some of the patterns and key things that any business owner should know before they come to you?
So one of the common patterns that most business owners comes in with, and they always say, "I do not want to pay taxes." Right? What does that mean? I do not want to pay taxes. That was old school way of thinking, right? You want to reduce your tax burden, but if you want to run a business and be successful at a business, if you are trying to get a grant, a loan, or even if you want someone to invest in your business, you want to make sure you show it to be profitable, right? So when you are preparing your taxes, you first of all, as a business owner, you should not be sitting down with your accountant once a year. You should not. You should at least minimum sit with your accountant quarterly, because your accountant should understand what is your goal as a business owner, personally and as a business owner. And that's what you should be working with your accountant on, that, reaching that goal. Whatever that goal is, no matter where you walk, wherever you go, your tax return, that's the first thing a financial institution or any agency is going to ask about. What does your taxes look like? Because your taxes tell your story, right? It tells how your business is going, whatever. So you want to reduce your tax burden, if you want to call it a burden, but you don't want to always be zero. You don't want to always show a loss. And so most business owners come in and say, I don't want to pay any taxes. But it's important that you pay estimated taxes during the year, so that at the end of the year, when you're filing your taxes, you're able to show a profit. If you have a profit, you should be able to show that. But if you don't have a profit, we'll let you get over for a minute, but that should not be your entire business history. You should not be showing a loss. Otherwise, you should not be in that business, or you should be looking at your numbers in that business to see how you can show a profit.
Okay, definitely. Very key. The IRS, banks, everybody only cares about your tax returns.
Yes.
If it's not on your tax returns, you didn't make any money. You can come up with any financial statements or other stuff that you want. So definitely key information. So Jack, you take a look at it, a little bit longer term.
Sure.
And perspective, and if people are thinking about potentially succession planning. And what are some things that people should be thinking about in terms of succession planning? Because most businesses never get sold or turned over, they just get closed after many years of toil. A lot of people end up closing their business not by choice. So how can they avoid that?
So just to reiterate what they were saying, I'm in an audit right this minute. Well, I'm not anymore, but it was an audit. The audit took an hour. When have you ever heard an audit taking an hour?
Mm.
Because my books were so tight, the audit took an hour. And more importantly, I paid nothing because it was so tight. So the point I'm making is, at some point, you're going to get audited. If your books are straight, you're good to go. So that's just a personal thing that I've been through. So when we look at business owners like yourselves, and we say to ourselves, we're gonna come in and we're gonna try to find two things. One is, how do we push the business to either the next generation, or how do we set ourselves up for sale? That's one. The other thing is, where are the pitfalls? So when we look at this, we say to ourselves, on the risk management side, if you're a sole practitioner or you're a single owner, and we look at this and we say, something happens to you, what happens to the business? Nobody ever thinks about that. Why? Because they're so busy in their business. They're not working on their business. And when I say working on their business, it's going to go to another generation, or it's going to go to, if you, thank God, you become so successful that it goes in a private equity firm buys you. So we always look to build in stages. If you're new, we're going to see how that's going to work in your generation. And then we're going to show you how it's going to work in the next generation. So in your generation, everybody thinks that their business is their retirement. It doesn't work that way. Because at any given time, when you want to retire, and if we're in an '08 situation or a situation, recession like today, what happens? It's not worth the same as it was in a great year. So there's many different tax strategies we use to put that money away. And if it's a son or a daughter coming into the plan, we fund different vehicles to be able to buy out the parent at that time. So there's many different things, and it is a psychology. It's definitely a psychology, because what do most business owners say? That's my business. I'm never going to leave. I'm never going to retire. I'm going to work until the day I die. It doesn't ever work out like that. So we try to use empathy, but you have to use empathy with accountability. So, and that's a fine line. So sometimes my clients love me, and sometimes they don't like me at all, because they tell them the truth. And it is the truth. It's got to build a chassis. If you don't build that chassis, all the stuff you do, the engines that are on top, they're not going to run. I've never seen anybody sit on top of an engine and drive it. So he has to have a chassis. So that's what we pretty much do in our business.
Okay, no, excellent. So if you're thinking about selling or transitioning, you probably need 3 to 5 years at least to position yourself, correct?
You do, but on the flip side of that, if you're new, we're not telling you to plan today to sell. If you're young and you're new and you're going to be around for 20 years, how do I be profitable, and how do I make you tax efficient? So when the time does come, you can exit out efficiently. So you're absolutely right. It's a 5-year window. So anybody that's looking to sell their business, unless they had such a great windfall, it's capital gains planning is the hardest thing in the world. So we use a lot of different strategies to fix that problem and pass it on to 4 generations. When you can pass a business on to 4 generations, that's huge.
Okay, excellent. So now, how many of you out here have had cash flow issues? Anybody? I see some hands that didn't go up.
I put my hand up.
I lift my
hand up.
Put your hands up. You have 2
Come
up.
on now, come on now.
All right. And
Shit.
if you're a small business owner and you've never had cash flow issues, then you probably already had a lot of money in detail.
I mean,
But that being said, it's important to address them, and there's some easy strategies that you can put into place if you know what they are. So, you want to share a little bit of that?
Cash flow is one of the things I work on, almost every day with accounts. And I had an account last year who said to me, "How did I make $200,000? I'm paying tax on $200,000. I don't have a dime in the bank." And I'm like, okay, well, let's take a look together. Number one, you've got your inventory is way too high relative to what you're selling. Number two, you have 30-day terms, but most of your accounts are averaging 45 days to pay. So most of their cash is tied up in inventory and receivables. And that is usually the place you can find where the cash flow problems are. One other area, I have this with someone I'm doing some pro bono work with, is they said that their business is not profitable. They're having cash flow problems. So I went over it quickly. I took an hour. I went over it with them, and it turned out that it's not the business that having cash flow problems. It's that they're taking too much money out of the business to support a lifestyle that they can't afford. And there's ways to address that in terms of you got to cut back here or there. But usually the solution is you've got to sell more. You've got to focus your attention on selling your way out of it, because you're not going to be able. A lot of the small business owners that may have alimony payments they can't get out of. They may have, debt, student loan debts for their kids, whatever it may be. So they have to look at solutions, and selling is the number one solution. And also looking at your margins, seeing if you can increase your pricing, get better margins. So, a lot of times when someone says they have cash flow problems, There's a lot of different reasons for it. You have to examine it and figure it out.
All right.
Forgive me, you said, a lot of them have debts. I honestly thought you said a lot of them have jets.
Jets?
I'm like, one of them.
I want to see them.
Believe me, none of my clients have jets. And if they did, I'd be on them.
So, no,
That's great.
excellent.
That's great.
You know, definitely, one thing that you sort of hinted on, but that's detriment to so many business owners, that is staying married. That is, you know, you can't understand how important that is until you go through it, and someone goes through it. So
It's very taxing.
if you can, it's worth it to figure out a way. So.
Is that where Victoria's Secrets comes in?
Yeah, there you go.
Maybe, that might be the problem.
That might be
the cause.
Yeah.
So,
we get to a divorce, it ain't no secret.
Excellent.
So, you know, we're PG-13 here.
Yeah.
Don't go any further. So, Mary, you know, you work with people on cash flow too. You know, definitely Robert shared a few things. You know, you've got your financial statements, your cash flow statement, your profit statement. Can you be making a profit and run out of cash? Or can you be losing money and still have cash? How does that work?
You can. So you definitely can make a profit and run out of cash. So basically, it's all about, if you're going into business, you need to plan. It's so important that you plan. And one of the first things you need to do when you're in business is set a budget. You need to have a budget for your personal, you need to have a budget for your business. I always add the personal with it, because my personal household is not in order, my business is not going to be in order, right? And if you're making a profit, but you're running out of cash, there's a problem somewhere. There is a problem. Are you pricing your product and service correctly? It's your accounts payable, are you paying out, or your accounts receivable coming in? A lot of times what I do see is with service-based businesses, they do not factor in their time. How much time it takes you to service a client, right? If you don't have a product, okay, most of the service-based business think about, okay, I don't have a product, so how do I figure this out? What's your budget? How much do I want to make an hour, right? And then, I don't know who's still doing 30 days, right? I guess if you're dealing with government agencies or large corporations, they're paying 30 days or 45 days. But if it's someone one-on-one, maybe 60 days. But if it's someone one-on-one, you need to be asking for payment when service and product is due. That's old school. That's old school or how most people do business. But if I'm servicing you as an individual, I need your funds now, because if not, then you cannot afford me, right? You basically, let's be honest, I'm telling the truth. You cannot
Absolutely.
afford me if you cannot pay me at the moment for my service, right? There are companies where they have a protocol where you have to do a purchase order, you have to do 45 days, you have to do 30 days. So that's where you need to plan out your budget. You probably need to reduce inventory, or I can't purchase anything as this moment because I know I'm not getting funding in 30, 40 days. So you can make a profit, but still do not have the funds to operate the business. So budgeting is so important, whether you have products or if you're service. Your time is so important. So you're going to figure out your time, how much I'm charging per hour. It's so important.
Okay. So definitely, you know, don't forget to pay yourself. Most small business owners undercharge. And because of that, they make less than if they had a job. And, you know, that's okay if you're okay with that, but that shouldn't be your goal. So, great points, great points. So now, Jack, you know, when you're thinking of cash flow for the longer term, what sort of things should you plan for the longer term cash flow, you know, as you grow in the business, but also as you exit the business, how can you prepare for that?
So what I notice in a lot of different companies, nobody has a reserve. Nobody has a reserve. So our biggest thing is to help build a reserve. Because at the end, and a mentor told me this one day, it was great. He said, you can last months without profit. You can't last an hour without cash flow. And that's the God's honest truth. And I've watched it happen. So we always look to be able to, A, budget, B, be more tax efficient. But by budgeting and tax efficient and coming up with a profit, doesn't mean you get to use it all. Because one day it's going to rain 10 years down the road, and you're going to have a bad market, or you're going to have something happen in your business, and there has to be some reserve. So we always put things into a reserve, a portion of the profit in a reserve. And the vehicles we use are guaranteed vehicles. Because at any given time, you're going to need to get to that money to fix a problem. You got to have the reserve. In the same token, you can't have it sitting in the bank making no money as well. So guaranteed products are where we put them. There's a lot of different guaranteed products out there that we use. But more importantly, being on top of your books, being on top of your budget, being on top of how you're being taxed. Now, I'm not saying you're saying that your clients say, I don't want to pay tax. Well, now you're not bankable.
Right.
In our strategies, I tell everybody when I walk in, you're going to pay tax. How much tax you're going to pay is another story. And by saving that tax, we use it and put it into a reserve. And, there's a lot of different ways to save tax. But unless you can defend it, because they all work, unless you can defend it, then it's not a good way to save. So black letter tax law, there's a lot of tax law and dormant tax law out there to help you to mitigate tax. And the key word there is mitigate, not pay, mitigate. And when you have that reserve and you have that profit, you got to be disciplined to keep a budget and definitely put that money away. And I'm not saying you shouldn't live, because why you're working, at the end of the day. But you've got to be able to put some money away on a tax favorable basis for yourself and some reserve for the companies.
I have a question.
Yes.
A lot of small businesses, and I'm good at this, but there's a lot of small businesses, and it's not talked about a lot. They don't know that they are write-offs, especially now many businesses are working from their home office. So therefore, they don't understand the difference. So they put all that away, but they don't understand that they can make money, and they want to be taxed because they don't know if they have write-offs. So how do you communicate what they can write off so that they can be profitable and not pay taxes?
It's more of a question for you.
That was a curveball.
So that's
So I know.
That's why I'm saying that you should be sitting with your accountant minimum quarterly, so that you can strategize with your accountant of what you can write off, right? And what's legally you can write off and what you cannot, so that you can strategize. So maybe if you at the end of the quarter, right? So we're going into fourth quarter. Maybe you want to call your tax planner or your investment person and say, hey, I need to reduce my tax burden, right? What can I invest at the end of this year so that it can reduce my tax burden? One thing I want to let everyone in this room know, the business tax audits are increasing. That was something that Biden did put in place when he did the Rescue Act, that they ordered more small businesses because they changed the whole tax form. It's less audit on the personal, but on the business, it's an increase. So you need to make sure that you do have all of your books in order. because they are coming. It may not be a one-on-one, a facial, or in-person audit, but it will be corresponding audits that will be happening. Because let's be real, they got to come back and get this PPP money back some type of way, right? I'm going to be honest with you. So, so you need to make sure you have these in order, and you need to strategize, right? Make sure you have all of these things in order. Another thing I want to say, we're sitting in the state of New Jersey. I hope New Jersey not looking, right? The state of New Jersey is fierce with business audits. They are fierce. I would rather go through an audit with the IRS than with the state of New Jersey. And so you need to make sure that you have all of your ducks. If you have sales tax, alcohol tax, tobacco tax, employer taxes, you need to have all of that in place, especially with the state of New Jersey, because they come harder than the IRS. I love you, state of New Jersey, right? And this being recorded, right? I have to tell them I love you, right? Because it is so serious. So yeah, you need to be sitting down. You need to be sitting down with someone that plans, right? You need to be sitting down with someone that's taking care of your books, looking at your books, making sure all of your numbers are in order. It is so important.
I think you answered my question in part already, but it's to the three of you. Who should be, when you have a small business, who should be on your financial team? Who are those experts? And the second part of that question is, what's the best way to choose and hire those? Because one of the things you just talked about in terms of the state versus the IRS is, it's important to me that my financial experts are on top of what's changing and how it impacts me and my business and my industry. So how do you go about choosing who should be on your team? How do you choose them?
All right, I'll start from my perspective is, if you're a small business, you need to have a bookkeeping platform that you're working on. And you need to have someone who's knowledgeable in how to utilize that platform. You need to have someone who knows how to categorize all of the expenses properly, and how to recognize the revenues for the business, because sometimes the revenues are cash that's come in, there's no associated invoice. There may be invoices that you have to apply against, et cetera. So you need someone who's got a knowledge of accounting and a knowledge of the platform that you're keeping the books on. And, someone like Mary and I, we work hand in hand, CPAs and accountants and bookkeepers too. I provide the information so that when Mary would sit down with you on a quarterly basis, she's got the information right there. If she doesn't have the information, she's got nothing to talk to you about. So that, from my perspective, you need to have someone who's knowledgeable about the platform, who's got a background, like myself, I have a broad background in business. And I've been an auditor and an accountant, so controller, CFO. So I have a little bit of an eclectic background. So I hope that answers that part of the question. I turn the rest over to the other experts here.
You said, how do you pick? And that's great, because I tell people all the time that I'm not your CPA, and I'm not your attorney, definitely not your attorney. So when you look at this, you say to yourself, first of all, you can have the smartest attorney in the world, smartest CPA in the world. But if you can't have a relationship with that person, because they are so, attorneys are listen, my accountant is a tax attorney. So, and he is cut and dry. He has zero personality when we talk. Outside of business, perfect. But when we're in, which some people can't handle that, some people love that. I happen to like it. So it's a matter of preference. It starts out with reputation, first and foremost. How do you know what somebody does and what they do is they're an expert in it? Well, listen, I have a stack of people that are my clients that like the way I handle their business.
Yeah.
You know, not everybody has the same personality either. There's people that don't like my personality, because I am empathetic, but make you accountable. And I say to them all the time, you said you wanted this, so now I'm gonna make you accountable to it. So it's really, it's a little bit of research for you, and it's a little bit of a gut feeling as well. So you have to be comfortable with the person that you're looking, not just in trust, but you can't be afraid to tell your professional, listen, I'm just not doing it that way because I'm not comfortable doing it that way. Because when we do things, or when I do something, I'm not going to speak for them, because when I do something, it's a matter of preference. You get choices. So I show you 2 or 3 choices on the way to run your tax savings and your wealth management. With these 2 folks here, it's, hey, here's what you did. This is what it is. So it all comes down to a personality, but first and foremost, you have to do your due diligence and make sure you know that they're well respected in the community.
Yeah.
Okay. Oh, let me just add to that. That's okay. So, because it's all about relationships, like you said. But the one key thing is, just like you evolve as a business owner and your business evolves, you need a different team as you go to different levels. So, when you're starting out, you might only need a team because you're not having enough sales, and the accountant can't really do that much for you because you don't have enough for them to work. Eventually you may need an accountant who's an accountant. Then maybe a small accountant, then maybe a big accounting firm. So there's a continuum, and you've got to evolve over time. And if you get it wrong, usually you're not getting the service and the treatment that you want, and you're paying a lot more than you should.
It's interesting that you say that, Andrew, because the hardest part in any small business owner is how do you break through the glass ceiling? I just went through this last year. I went from, moving along, happy, Jack, just playing golf and enjoying himself. And next thing I know, because the tax law changes, I got to break through the glass ceiling. And that's hiring people, hiring strategic partners is I would have never done it by hiring everybody in-house. So now how do you vet the strategic partner? And that's what we did. So to break through that glass ceiling every single time, you grow, and you have to prepare to grow. So people say, if I grow, I'm going to add, 6 employees. Well, there's a cost to 6 employees, a big cost. And there's hidden costs to the 6 employees. It's not just about paying payroll tax and coming up with a salary. It's training, it's time, there's a lot involved with it. There's mistakes along the way that when you train them. So breaking through the glass ceiling is a tough spot, and how you hire any professional is based on where your glass ceiling ends and how you get through it. So for us, a company over $50 million, I can't touch because I'm not that type of firm. So I know my limitations, and when I have a client that goes over that mark in revenue, I look at them and it hurts because I don't feel like getting sued either. You got to move on to so and so, and I'll literally move them on. Companies that go down past that 50, I have those same people say, you got to go work with Jack because he's in that space. So knowing your limits and knowing your glass ceiling is very important.
Okay.
Sorry, I cut you off, man.
So,
I would also say that, in terms of who you select as part of your team, if they're not interested in your business, if they're not asking you about your business and they're only dealing with transactions, then they're really not probably the right person to be. I pride myself on understanding each client that I work with. What is their business? What drives it? What keeps them awake at night? If they're concerned about that and they take the time to do that, then there's someone you might want to have on your team.
I have a comment also. And if you get a team, you have to make sure that team works together. So that's so important because we all need, if we are a team, for instance, right? He handles your bookkeeping, I handle the taxes, he handles your strategy. We need to be able to understand what you as a client wants right? Not what we feel you need, it's what you want. And so we three in this industry, we tend to, sometimes we have to work together to reach your goal, because Jack may say, hey, Mary, this is what the taxes need to look like in order for me to do what I need to do on my end, right? And then he may say, oh, yeah, Mary, but this is what I see, something kind of wrong here with the taxes. How do we handle it? So you have to make sure that your team is able to work together in your interest.
Yeah, in our business,
Mhm.
step one,
Mhm.
while you're sitting with somebody, who's your accountant, who's your lawyer?
Okay.
Because you're not moving without them, especially with CPA or accountant. You guys are right.
Okay.
Well, when you get to a certain level.
I will tell you this, that there's some folks that I know that are beginning, and they rely on them to do, or tell them everything. And, for me, if I can collaborate with an attorney and a CPA, because that's the foundation, then we got it right. If there's gonna be a conflict, I'd rather step away and say, stay with your accountant if you're happy with them, because I have to be able to work with them, and if we can't, I'll step away.
And
But I haven't had that happen, by the way, yet.
And based on this morning, before any of this stuff can happen, let's talk about, you can't hire anybody or manage anybody if you don't know what they do. So you have to have a basic understanding, and you can call the shots. Just because your lawyer says something doesn't mean it has to be it. So knowledge is key. So Lorena, you had a question?
Well, I want to say that you spoke to the question, and so did you. I put your name again?
Jack.
Jack. And it wasn't really a question, it was just a comment, and very key points that were made. And some of the things that I tell my clients, because I have clients who want to do what was just said. They want to say, oh, my accountant will handle that. And then they get upset at the end of a period when the accountant didn't do something because they didn't sit with the accountant periodically. Their expectations weren't even considered, not to be met, just considered. But what Andrew spoke to that I really appreciate, and I was going to mention, I have a saying to my clients: if you're making enough money, because I don't need a CPA, I don't want to pay a CPA. If you're making enough money, if you're running, if you're at a level where you don't have to have a professional help you manage your money, that means you're not making enough money. If you're somewhere where you don't need that, if I can do something, and let's say I have a wedding for my daughter, and if I want to take my camera and just do pictures and we do selfies, that means it's a small wedding. But if I want to have a real nice wedding, get a photographer.
That's the city hall wedding.
So similar analogy, and so Andrew pointed out, some of the things Jack pointed out, and of course, you pointed out as well, and Barry, I'm really loving this. I do these types of talks with I know finances, I know numbers, but I don't touch them because that's not what I do. And I don't want to get sued, and I don't want to know what to say. His efforts told me to do that. That's why I took that like that.
Okay. No, that's so now we're gonna go into the F word. And what is the F word? Finance. So what are some best practices as far as finance, and what should people know or think about? Because
Well, it depends on the purpose of the financing that you're seeking. Just simply, if you're looking to buy equipment that you need for your business that is going to have a useful life, you're going to finance that with some type of loan, term loan. If you're looking to expand your business, or if you have a cyclical business, is a good example, you would need a line of working capital. Because what working capital line is, it's not, you don't take a working capital line and use it like a loan, okay? If you have a working capital or a line of capital, you should use it as a smoothing technique. Okay? A lot of businesses, especially if they're an e-commerce business, for example, have sales, and automatically in the fourth quarter they jump up. Okay? And then it drops right back down. So then they have a lag in collecting some of those receivables, and they need that line of credit to kind of smooth that out. Okay? But you use it, you pay it back. You use it, you pay it back. You don't use it as a permanent solution to a problem which is, is evident in your margins aren't high enough, your overhead's too high. You can't borrow your way out of problems. Okay? You use debt properly. You use debt for expansion. You use lines of credit for smoothing. I think that would be my definition of it.
Mary, can you
They
share?
have this- I'm sorry.
Yeah.
You notice what you're saying. Nowadays, I'm always being contacted by, I'm questioning small business people, they are, by these finances come always want to, give you a loan, very quickly,
Yeah.
And this new thing they have out now is that they can give you a loan. They want to take money out of your account daily to pay
Well,
you back.
that's a hard money,
Talk about that.
hard money loan, and those are terrible to get into.
Yeah.
Excuse me?
They're hard money loans. They're, the only time I've had clients that have had to take hard money loans out, which are very high interest rates.
Yes.
The only reason that I would have not allow, the client can do what they want, but would say, yeah, let's take the hard money loan is that they don't have another way of covering that immediate obligation.
Okay,
So-
that's what it's called, because I remember, I called me about that, I'm like, I didn't know what it was called, or what that was all about. I'm like, because I never heard of that before until after.
Oh, yeah, they make it sound great and enticing,
Yes,
but then every single day or every single week, the money's coming out of your account, and all of a sudden you're like, I can't service this loan anymore.
You're talking about not living, right, without cash flow for an hour. Remember I said
Yeah.
that before? Well,
yes,
that will literally take you out of the game.
Yeah, exactly.
I tell people to run from that loan.
Right.
Don't even go there. Because
Yeah.
you're never gonna make your way out of it.
thank you, because the one that I get those calls all the time, and I was talking with, a business associate about it, because, she was running into some challenges, and she was saying, considering that. And I said, I'm not an accountant. I said, but I don't think that's an answer to your financial issue challenge. So that's what hard money.
Hard money.
Thank you.
And that's a great piece. I always tell people, don't take money from people who are trying to get it.
That was good.
You need to go find the people who give you.
I like that.
And I can use that line too?
Yeah.
No trouble.
Royalties.
Oh, royalties.
It's like $5.
Good.
So she brought up the point of predatory loans or challenging loans. There's others besides that. What types of things have you seen clients have or other people have that that were maybe they shouldn't have done, or
How long do we have?
well,
For a while.
so because you got what other types of loans do you have that are like bridge loans and other things?
So there are a lot of loans out now, because of COVID and things that's going on. There are a lot of organizations, SBA loans. I think NJEDA just had a loan. If anyone read the fine lines on that loan, I think a lot of us missed that because it was the loan, but if you read the fine lines, if you paid the payments for 5 years, the other part of the loan is free, right? So that was like grant. Yeah, yeah. So it returns a grant. So I think a lot of people miss these opportunities out there. We have a lot of nonprofit organizations out there. You have like UCECD, Union County Economic Development. They are not just in Union County, they have 0% loans, right? For $50,000, you get 0% loan for $50,000 because Tory Burch, with the handbags that we buy and support company, pay lower the interest rate on that loan. So there are several types of loans that goes out there. Your local bank does give loans. They do have SBA loans that you can go into, and they will provide that because they need to provide these loans in their community. But when you are choosing these loans, you have to be conscious of how much the loan, what's the bottom line, how is it going to impact your finance and your business, as well as, and I always tell everybody this, be conscious of your debt to income ratio. So when you are getting these loans, a lot of us, of course, the bank, the first thing they look at is our own personal. But I want you to be conscious to start building up your business loan, right? Your business credit. And you want to try to start shifting from your personal credit to your business credit, because then you get into this whole big debt ratio if you're trying to purchase something personally and then you have this loan for the business. So you want to be conscious of that. You want to be conscious of your interest rate. What is the interest rate? Can I afford this loan? And hey, what am I getting this loan for? Whatever I'm purchasing or getting this loan for, and I'm putting it back into the company, will it double my bottom line? Will it be able to pay that loan back and plus make a profit off of it when I make that monthly payment? So these are some of the decisions you should make when you are doing it. But there are so many loans out now, grants and loans out because of COVID, that you can take full advantage of.
I have a question about these organizations like you, CEDC, and those types. I want to just put it on that. These organizations are said to be able to lend money to small businesses, whether they're just being launched or existing. But so many of these businesses are not able to get the money from them. And I've seen cases where they have been declined for reasons that are very, I would say nonsensical reasons. Why are these organizations actually lending money? That's my question.
I would like to answer that because I deal a lot with that. So these organizations are lending money. And so we're going to go back to what the issues are. And some of the time, these organizations are better to get loans from than the bank because their guidelines are not as strict as the bank. The problem is, and I'll tell you, three of the main problems: the credit, the business owner credit, the business owner tax return, and the business owner financials. The things we just discussed earlier are why most of these organizations deny these loans to the business owner. It's because if you're going to get a loan from someone and your tax return shows a loss, how are you going to pay me back? You can't pay me back if you're operating on zero, right? On a negative. So these are some of the things that they look at in these organizations. And I'll be real with you because I deal with this all the time. That's why it's important that you sit with your accountant and your financial planner so that you can strategize. Like, okay, I need to make a large purchase. I need to maybe purchase a large building, $1 million, $2 million building. So let's strategize. If I'm not prepared this year, let's make sure that next year I'll be able to go in there and qualify for that loan. So the reason why is those three are the main reasons why.
They have underwriting criteria just like a bank does as well.
Right.
They have to meet whatever their underwriting criteria is. So people from the community financial institutions means that they can just lend the money. They have to adhere to certain regulations and guidelines as well.
And if you don't meet them guidelines, they can't lend you money. They typically operate just like a bank. They have a loan committee.
Yes.
Sometimes they'll look at all your financials. If you're on the borderline, they'll call you in. And that's where your storytelling plays a role. So you can explain certain things, and maybe they extend the loan, maybe they do not.
And don't think it's a great deal either.
I was gonna say,
Because
what
it's
about,
not.
Yeah.
what about?
SBA loans are not a great deal. I mean, they're interest rate wise.
But I was gonna ask, what about for, and this is for anybody, for, new launches? Someone new, they don't have a history, the only, taxes they can show if are their own personal. If they're just launching, because, you know, they always have the saying, banks and these institutions don't
Don't
lend
fund
money.
startups.
Yeah, don't fund startups, and they don't lend money to organizations, they lend money to people. So,
Well, banking guidelines right now are not exactly the easiest thing. I mean, they're being watched on every single loan they make. You used to be able to go to a bank, sit in front of one of the people on the platform, they take your information, it goes to a board, which if it's your hometown bank, you probably know 10 people on the board, and they're gonna give you a loan based on what you gave them, they know you, great. Today, try to go get a loan at Chase. It's not gonna happen. It's just not. And really, you know, when I look at startups, unless your credit's great and you got a war chest of money, they're gonna ask, you know, collateral.
Yeah.
They're gonna ask some type of collateral at that point.
Personal
Well, if I
guarantee.
had it, if I have the cash, what the heck do I need a loan for, right?
Yeah.
So a lot of times when you can set up or structure either private investment or venture capital. Now, venture capital, unless you don't set it up right, they own you. So many times I've walked away, had a client walk away from venture capital because they wanted to stay in too long and they own too much of your business. The biggest thing with private investment, what's the exit? Interest rates are important, or ownership, their portion of ownership is important, but when are you out of my hair? That's probably the most important. So startups are tough. They're not easy, and especially in the state of New Jersey. A lot of money in the state of New Jersey, but not a lot of money going out.
Okay, great. So, you know, time flies when you're having fun.
Yeah.
Usually that's not when you're talking accounting and finance. Today it is. So,
Trying to be a little animated.
but before we close out, you know, financial knowledge and education is hugely important.
Yes.
How can people learn some of the things that they should know about finance and accounting as a business owner?
I think the panel before talked about reading. I think, you know, reading and also watching YouTube videos on you know, financial topics like as I pointed out before. How do I read a financial statement? How do I read a P&L? Looking at, you know, they'll show you things like compare last year's P&L to this year's P&L. What do I see in the different lines? What are the variances? Why are they there? Understand your numbers. Understand how to read a balance sheet. Understand the ratios between assets and liabilities, short-term and long-term. So there's a lot of good educational videos, and there's a lot of great books out there. And I think it's up to every small business owner to gain that baseline education, because if you have it, it makes our job a whole lot easier, and we can help you more effectively.
And you make more money.
Absolutely.
So, Mary?
I would say, think about it, strategize. A lot of times what we don't do as small business owners, we don't build relationships, right? You have to build, whoever has your money, where you're banking at. If it's a local bank or a major bank, go in there and build a relationship with that bank, right? Understand what they would want or what they need. Me personally, I always build a relationship with a larger bank and with my community bank. It's so important that you do that. So when I need something or want something, right, they know me. They know what's going through my accounts. They know I am a serious business owner, and just build relationships. You got to build relationships.
Cool.
Yeah, I would I would probably say that as a business owner, even with finance, you walk in, you don't know what you don't know. The key is you have different industries. There's different associations in your industry. There's different specialists in your industry. You know, this thing, I don't know who was saying it before, but always said you can't get off your phone. Well, if you're going to be on your phone, you might as well look up your industry and pitfalls of your industry. I put pitfalls of demolition industry. The stuff that came up was out of control. Even stuff that I didn't know. And you pair your industry with the experts that are usually going to help you, but always know what you don't know, or try to know what you don't know. And even if you don't know what to ask. Well, this thing right here, which I hate, I want to use as a doorstop because it's forever moving. But it'll tell you what questions to ask. So you really need to really research your business and where are the pitfalls or where are the trials and tribulations in your business.
Okay. Excellent. So, tremendous panel.
Straight up.
Okay.
Do we have time? All right, so this question is to Jack.
Yep.
And I'm going back to the first phase of your panel. Strategy, what would be 3 things you tell someone to put in place if they're starting a business to sell that business?
3 things.
3 things.
So the first thing I would say to you from day one, make sure your books are straight and show a profit. That's number 1. From day one, because the longer history you have of making profit, you know, they call it EBITDA. That's your expense before
Earnings before.
taxes and interest. I always forget that acronym, but I know what it means.
EBITDA.
We're here to help you.
Yeah, thanks. So you always want to make sure that number is always growing at that point. So what does it really do? It's gonna really show what you're really worth. That's number 1. Number 2, always have a exit plan to who you may sell it to. So, you know, it could be somebody in your industry, which is a little dangerous sometimes because you don't want anybody to know that you're selling. I've done 6 different transactions this year to private equity firms. Person wants to leave, kids don't want the business, sell it to the private equity firm. They still got paid a lot of money and they still continue to get paid. And then have a tax strategy on how you're going to receive it. How you're going to receive that money. If you sell a business, there's capital gains tax. Well, how do you eliminate or negate that capital gains tax? That's what you see me, by the way. So, but anyway, you always want to have that stuff behind you and always run. I can't stress it enough. If I tell you every single company I walk into, their books are always showing a loss. And then they complain they can't get loans, they're not bankable. And when they go to sell, they're telling me they're worth this, but what you're showing me,
They got the cash under the bank.
some of them are sleeping on a pretty high mattress, to be honest with you. Then they ask me, how do I get it into the system? Yeah, I'm the wrong guy.
Don't tell me.
I'll negate the tax, but I'm not bringing it in. So, you know, if you're saying to me that you're gonna build this business and you want to sell this business, right? From day one, the books have to be straight. And I don't care if you plan on being in it for 20 years. Because at any given time, audits come up. Like I said, my audit was an hour. Nobody's audit's an hour. It's usually days. I had it ready. I had the information. I went into went in with my tax attorney, and he said I couldn't do it alone. Because I was going to say something to the auditor, he was going to kick me.
They knew your lawyer didn't want that fight.
No, and that's the God's honest truth.
That's the truth.
Because I would have stuck my foot in my mouth. So,
Be quiet.
so make sure you have your books in line all the time. And if you're not showing a profit, you got to see why you're not showing a profit.
Thank you.
So, you're welcome.
So Jack, my audit was less than an hour. So you're not the only one.
I thought I was doing good.
No, it was good.
All
And
right,
I'm just
good.
saying you're not the only one.
Ooh,
out
you
there.
guys got a 4.0, you know, on your
Yeah.
transcript.
But,
The audit transcript.
It wasn't me.
yeah, but
I give it to them and they keep it all in place and then I just show up
Yeah.
with a checkbook, hoping I don't have to write it.
so So this has been great. You know, 3 different perspectives, a lot of knowledge here. And you know, I encourage you to continue to learn as much as you can about these topics because, you know, it's not sexy like marketing and sales, but it's just as important on the other end. Couple resources. There's actually 2 back there. 3. In my book, chapter 2 is called What's Your Greatest Fear? And it's numbers and analysis. So it talks you through some of the key things you need. And chapter 3 is about how will I get the money? So it talks about financing and how to pray for financing. So very important to pray. And let's prepare, research, analyze, and yield.
You said
But it doesn't hurt to get pray.
Prepare, research.
Okay.
Analysis and yield. So,
Right.
but it doesn't hurt to get on your knees because that can work too. But you know, so definitely in my book, Running Your Small Business Like a Pro, the workbook, also Lorena's book, My Business Plan book, that outlines things on finance, you know, your financial plan. So those are resources. YouTube videos are good. If you want to take a class, the Small Business Development Center does a great class here at Essex County. It's 4 5-hour sessions. And the 3rd and 4th are accounting and finance. And I teach the accounting and finance. I did the accounting last Saturday, and the finance tomorrow. So we've got 5 hours of accounting and then 5 hours of finance. But you learn things you need to know that many business owners don't know. You know, so definitely those. If you want other resources, feel free to reach out to me or anyone on the panel. And you know, we wish you much success in doing this. Thanks again for coming to the Power Breakfast Conference. We hope to see you at future ones, but we also hope to see you doing more business and running your business better as a result, because that's why we do this in the first place. So thanks again. We got the room. We got a little food. So